topics and opinions expressed in the following show are solely those of the hosts and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Welcome to the Ask the Expert show on W4CY Radio and Talk4 TV, where we bring you educational information from top local experts in the fields of legal, health, financial, and home improvement. Now sit back and listen to experts in family law, association law, hearing loss, business brokers, home care, along with many other topics. Now here are your hosts, Steve-O and Sophia.
Hey, good morning, Florida. Welcome to the finest show in the United States, the best podcast with the best experts. This is the Ask the Expert show. I'm your host, Steve-O. This is the first Monday of the month, and that means Provise Management Group. I got to tell you, the most important word when it comes to money management is trust. And Ray Ferrara has been with us for, I think, 4 years now. And I got to tell you, I have never had so much respect for a company, especially when it comes to handling money management, as Provise Management Group. I've always thanked God for them. Good morning, Ray.
Good morning, Steve, and trust you had a wonderful holiday weekend.
It wasn't long enough, you know.
Indeed. Well, we had a pretty rainy weekend and ruined a lot of plans for folks. But, you know, all in all, we can be very thankful that we're here in this great country and celebrating our independence and the American free enterprise system.
Well, speaking of this weekend and rain, I know you feel the same way. We want to send out prayers to all those families down in Texas that went through a horrific weekend with the floods, and we just want to send them our prayers.
Absolutely. It's quite devastating, and cannot imagine what all of those families are going through at the moment.
Ray, I got to tell you, our show, I think it's been 4 years, and it's amazing. Just last week alone, I got 3 emails from people who said, hey, I never knew about this show. I was shocked after as long as we've been on, but there's still new people finding the show. Tell people about Provise Management Group.
Sure. Provise was founded about 39 years ago. It is a financial planning firm, first and foremost. We look at retirement planning, estate planning, investment management, risk management, asset protection, education planning, all of those different things as a subset of a financial plan. And unlike a lot of companies that call themselves financial planners or financial planning, most of them are just asset gatherers. They just want to manage the money and then go play golf and everything else. The hard work is in doing the planning work, and it's a continuous and ongoing process. We have offices in Clearwater and Tampa, Florida, but we have clients scattered over 30 plus states. We're working with about 1,100 families and something like about $1.8 billion in assets under management on behalf of those families. And we always offer a 1-hour complimentary consultation with any of our listeners. We're happy to meet in either our Tampa or Clearwater office. If those are not convenient, we're happy to do it by Zoom. You get a 1-hour complimentary consultation, get to know us, we get to know you. And if we can't help you, we'll be happy to refer you to someone who we think can.
You know, I got to tell people, we always talk about very serious topics. And I asked Ray this morning, just so you know, Ray does have a sense of humor. We got a lot of emails in since Friday because people saw the show was going to be playing today. And I asked Ray, what do you think most of the emails were? And of course, he had to come up with something that made me laugh. He said, the weather. Well, that's not true. And he knows it. Everybody wants to know about this new bill. But I got to start off with saying, Ray, you said that you didn't think they would get it done by July 4th. I was shocked, Ray, that it was done by July 4th. They did get it done. How did they do it?
Well, the fact of the matter is, I was wrong. I didn't think it would get done. I didn't think it would get done until sometime later this month. But there was enough arm twisting, cajoling, threats in some cases. I'm going to campaign against you if you don't vote for this. That the president was able to round up a 50-50 vote in the Senate with the tie broken by Vice President Vance for it to pass the Senate, and then on to the House with some compromise language in there relative to the SALT, that's state and local taxes deduction, which we'll talk more about in a minute. And at the end of the day, they got it done, and you got to give credit to both the Senate and the House for stepping up. Again, even though the margins were very small, that's what the majorities are all about, is even if it's by one vote, as it was in the Senate, the majority wins.
You know, I guess the number one question, Ray, was, does this new bill only benefit millionaires and billionaires? Does it benefit the middle class or even the lower class?
So certainly the Democrats have made a big deal out of that. This is a tax bill for billionaires. I don't know that they mentioned those paltry millionaires, but just the billionaires. The fact of the matter is that as you look at the bill, and we'll talk more about all of these things a little bit later in the show. The real winners in this were clearly the continuation and the permanence of the current tax brackets. It is to the benefit of those that are wealthy. They would have seen a pretty substantial tax increase had this bill not been passed by the end of this year. But we've had these tax rates for the last 8 years. We've gone through COVID. We've certainly had all of our share of geopolitical events. More recently, Ukraine, Gaza, Iran. And yet our economy has grown just as was projected back when the 2017 Tax Act was passed. There's some special provisions in there for those that have lower incomes. There are some pretty good tax breaks that are there that phase out at different levels of income. So I don't think that it favored one group over another. I think it was tried to be very broad brush, and clearly in terms of dollars, because the dollars are bigger, the people who have significant wealth, they are going to save more, quote unquote, because they have more. But at the end of the day, we see the bill as a relatively broad bill that is helping all classes of folks here in America. And perhaps I should say most, because somebody could always argue that there's somebody that wasn't favored
Right.
under the bill.
So there's something in it for everybody.
There
But it
is,
sure isn't a perfect bill, that's for sure.
no question.
Now, what was the final outcome on Social Security benefits, Ray?
Well, the campaigned very hard on not taxing Social Security benefits. And as we have spoken before, that was a really bad idea. And why was it a bad idea? The reason it was a bad idea had nothing to do with the concept. Being on Social Security myself, I could certainly feel good about that. But the problem is that the amount of Social Security that is taxed as income, that money does not go into the general fund of the United States. It goes back into the trust fund for Social Security. And if they had not taxed, if they had eliminated the taxation on Social Security itself, then the trust fund would run out of money even earlier than 2034 or 2033. So we always thought that was a bad idea. What the president and the Congress came up with as an alternative is that seniors, defined as someone age 60, someone over age 64, meaning 65 and above, would get a $6,000 additional standard deduction or added to their standard deduction. And the net effect of that is that instead of about 62% of those that are on Social Security 62% not having to pay any taxes, is now projected to go up to 81%. Who isn't included in that? Well, there are phase outs on that deduction based on the amount of money, the income that you have, so that those with a lot of money and a lot of income will not get that additional deduction. So it's a classic example of whether there's some, in our opinion, that there was some balance that was in the bill that says, okay, for those who have smaller incomes, we're going to give an extra $6,000 deduction, but we're not going to give it to everybody if you're above certain limits. And we're writing up an entire piece right now on the bill, giving very specific information and ideas to consider. And certainly by the time we meet in another 2 weeks, we'll have that all completed and make it available to the listeners.
Now let's talk about overtime and tips. There's no tax on overtime and tips. Who is that going to benefit?
Well, again, one would think that for the most part, that is going to benefit folks that are at the lower end of the income scale. There are some caveats on the tip side. It only exempts the first $25,000 of tips, so that money is not going to be taxable. If you are working in a small little restaurant somewhere here in Florida, and you're making $40,000 a year in tips, that $25,000 exemption is going to be very meaningful to you. On the other hand, if you're working for tips and maybe you're in a large city like Los Angeles or New York or Chicago, where very conceivably you're making $150,000 a year, it's still going to be meaningful, but not nearly as meaningful as it will be for those that have a smaller income. Overtime pay is not paid to exempt employees. What is an exempt employee? That's somebody who's on a salary, not on an hourly rate. And overtime is paid to people who work more than 40 hours in any given work week. And that income as well is going to be exempt from taxation under the bill. And again, however, there are limitations on who's going to be able to take advantage of it. There's a lot of conversation about, well, I'm going to change my salary, and instead of calling it a salary, I'm going to just say that I'm getting tips. They covered some of that by, again, putting income limitations in, that up to a certain level you get the benefit, then it phases out, and above a certain level there's no benefit whatsoever. Again, so a rather measured and balanced approach, and it allowed the president on both the senior piece, the overtime piece, and the no tax on tips, the promises made, and he will say promises kept.
I heard a talk show the other night and someone was saying, they put all their tip money is cash and they don't declare it anyway. But I don't think that's true, Ray. I think a lot of people uh, now pay by credit card or their debit card or Apple Card, and they have to declare those tips then. Is that true?
When a customer uses a credit card and adds the tip to the credit card, it runs through the business, and the business then provides a 1099 to the waiter or the waitress at the table. If it's cash, the answer to that is it's supposed to be included,
Right.
but maybe sometimes it isn't.
Okay.
If you're in a restaurant in New York City, in most places you're going to pay by credit card. But I do remember an experience, Stephen, when I was at Peter Luger Steakhouse in Brooklyn. And
my favorite place, Ray.
Well, then you know what I'm about to say. My friend who was taking me to dinner along with one other associate pulled out his credit card at the end of dinner, and I told him, I said to him, Kevin, this is owned by good Italian people. They like cash. They don't like credit cards. So unless you have enough cash or a check with you, you're not going to be able to pay for dinner tonight. So
That's right.
his invite of taking me to Peter Luger's, it turned out to be my buying for all of them because I had the cash to pay for it.
Oh my God. Yes. In fact, I've actually had their family on my restaurant show, probably the finest steakhouse in the United States. I've got so many questions here for you. What about the new tax brackets, Ray? What do they look like?
Well, interestingly, they're not new. They're just an extension of the old ones. And under the 2017 bill, Stephen, they had a sunset in them. The top tax bracket was reduced from roughly 39% down to 37%, but it was temporary and it would sunset at the end of 2026. Excuse me, the end of 2025. And would go back in 2026 to the higher level. Well, they kept those same brackets, but what they did this time is they made it permanent. Now, what does that mean? Well, what it means is there's no sunset provision on those tax brackets, and the brackets themselves will be adjusted for inflation as time goes forward, but the percentages will stay the same. Now, appreciate that any legislative piece coming out of Congress is just as permanent as the current legislature that's there, because when there's a turnover in the legislature, they can rewrite the law, and therefore it's permanent until it's not. But at least there's no sunset provision. Top tax rate is 37%.
Okay. Now, a program that is going to be new is where the child gets, I believe it's $1,000 at birth. Can you explain that one?
Sure, and that is exactly what is being proposed here. That each child born in the United States, beginning this year, is going to have an account opened up for them through the Treasury, and that $1,000 must be invested into a index of some type. It can't be into a mutual fund or individual stocks. It has to be into an index. Anyone who wants to add money to it can, up to $5,000. So additional money could go in. They tried to name this particular savings plan after Trump, calling them Trump accounts, but that didn't make it into the bill. Maybe it'll still be dubbed that by the Treasury. We'll have to wait and see. The money can't be touched until the child is 18 years of age. And then they can take it out at that point for certain things without having to pay income taxes on it. But if it's taken out just to go buy a shiny red car, they'll have to pay income taxes on whatever they take out, plus a 10% penalty for quote unquote taking an early withdrawal unless it's for one of those exceptions that exist, and that would include a college education. It would include the purchase of the first new home, etc. My analysis on that, Steve, is that it's okay. It's a good deal. I mean, it's $1,000 you're going to get from the government. That's great. You can add $5,000 to it, but given a choice for a parent to add $5,000 to that or to fund a 529 education plan, which accumulates tax deferred and then is tax free when the money is taken out, I would tell most clients to seriously consider putting the money into a college education fund first, and then if they still have money left over, sure, why not one time put that $5,000 in? But it's going to be very interesting to see how financial planners embrace that concept of actually adding money to this particular fund.
We just got a text from Greg in Tampa. Ray, I always enjoy listening to your show. Thank you so much for giving your time and your knowledge. Have you heard much more about the gold card, and will it bring in enough money to make a difference?
So I assume he's referring to those who can pay money to basically immigrate into the United States.
Yes.
Can it bring in a significant amount of money? I guess it depends on your definition of significant.
Right.
Can it? I think it's $5 million was the number I remember hearing.
That's what I heard.
That somebody had to pay, and they would be able to get this gold immigration card. So when you think about that, for every 20 people who do this, that's $1 million. Or putting it in the context of 200 people doing this, it's $100 million, and that sounds like a lot of money. But Stephen, in the grand scheme of things, when you're talking about trillions of dollars, it's not that significant. Certainly, there will be those that will want to buy their way in, but not something that we think will bring in a lot of money to the Treasury.
Well, we've only got a couple minutes left. How do you think this is going to affect the 2026, which will be midterms, and the 2028 elections?
Well, without question, this will be a place where the Democrats are going to try to speak to the electorate. It was very interesting. You go back to President Obama. His signature legislation was Obamacare. He was able to get that through Congress when the Democrats controlled the House, the Senate, and the White House. And then there was a turnover in the following election in the House that turned it Republican. You had the signature legislation of President Biden, which was the so-called Inflation Reduction Act. And that was used by the Republicans. And there was a turnover in 2022. The Democrats lost control, and the Republicans took control of the House. The Republicans only have an 8-member margin. That traditionally there is whatever the majority party is loses seats. Is it likely that they will lose 9? Really only have to lose 5 seats for the Democrats to get control? I think so. History says people have a tendency to turn over the House, after one has had the control for the first 2 years of a new presidency. So I think it's highly likely that the House will turn over, and that's why it's important from the president's perspective whatever legislation he wants to get through, he needs to do it between now and January of 2027, when the new members of the House will be seated.
Ray, I'm amazed you run a very large company, how you stay so knowledgeable with everything changing. It's amazing, but we're so appreciative to have you. Tell people how they can reach your office.
They can reach us by simply calling 727-441-9022. That's 727-441-9022. Or simply shoot us an email at info@provise.com. And again, just want to remind everybody, you are, as a listener, you're entitled to a 1-hour consultation in our Clearwater or Tampa office or by Zoom. So please just reach out to us, and we would be delighted to have an opportunity to visit with you.
Ray, you're the best. And the great news is Ray will be back with us in 2 weeks with more Ask the Experts. Thanks, Ray.
Thank you.
Have a blessed week.
You as well. Thank you.
Thank you. That's Ray Ferrara, Provise Money Management Group. We're going to go to a short break. We'll be right back.
Thanks for tuning in today to the Ask the Expert show on W4CY Radio and Talk4 TV. Tune in next week and every week to hear more from our experts on personal injury, insurance, air condition repairs, estate planning, Medicare, and many other topics in the areas of legal, health, financial, and home improvement. See you next week.